Welcome to TheoTrade. This is Don Kaufman. It's July 30th, 2018. You are watching the Theo Night video. Let's get to work here. S&Ps are down 14 with just about 9 minutes left in the trading session. But once again, it is technology and specifically the entire Nasdaq that is under a degree of duress, being led down by none other than, once again, what we term the monsters of tech. Now, the monsters of tech are the collective symbol that is Microsoft, that is Apple, that is Facebook, that is Google, that is Amazon. And for those of you that are aware or maybe need a little bit of a refresher on this, what we've actually done is we created kind of a conglomerate symbol and a ratio of products here, which Facebook, Apple, again, Microsoft, Google, Amazon, added them all together to create what we term the monsters of tech. And why that is such an important concept right now is when we start to look at this on the daily chart. And again, this conglomerate symbol, after you create it, you can look at it on a daily, okay, you can look at it on a weekly, anything you want. It is the most serious and violent move we've seen in any 3-day window inside of this product since we've actually built the particular product. Yes, earlier this year, there has been, and if we elaborate a little bit, there has been a little bit more sell-side activity and follow-through to the downside. Nevertheless, it's quite serious. Again, in a 3-day window, including, of course, 1, 2, 3-day window, the sheer magnitude of the move and the market cap that is being lost right now is none other than staggering. Now, with that thought, the monsters of tech are taking a big hit. Clearly, we have to think about Apple that's coming out on Tuesday after the markets close with its earnings. I'm going to come to that in just a moment because there's no question that Apple really stands between, the technology and the oblivion. That is, Apple stands, okay, to, and reasonably speaking, this could be the linchpin specifically to technology. If Apple does anything outside of what is expected and probably has to blow away earnings, you could see tech get absolutely decimated. And this is the way that you need to think in a kind of a defensive manner as a trader. But at the same time, this could actually be worth a couple of nice shots to the downside. Meanwhile, I'm going to show you a few trades on Apple here momentarily. But before I get over to Apple, and again, we can explore technology all day long. You want to look at Netflix, down almost another 6% today. You're getting Amazon, which had absolutely record earnings, okay, in the last 2 trading sessions, getting whacked back today by a tune of, 2.2%. But what's interesting to me, it's not technology. Let's move away from the obvious for just a second. And obvious is, all right, tech is getting absolutely slammed. Let's move into kind of the peripheral, side of this. Why is the market with tech getting slammed? Why are the S&Ps only down some 15 points? Okay, well, the tide is turning right now. And when I say the tide is turning, you have to look at things like, for example, Caterpillar. Now, Caterpillar had an earnings announcement today, and I want to actually clarify this because if you look on an intraday chart, the earnings announcements, I'll tell you what, they smoked it. They're knocking it out of the ballpark over here. And on that release this morning, the stock trades considerably higher. Again, we were on Friday trading around the 142, 143 range. We actually jumped up to 148, which is the upper end of the expected move. Right at the cash open, they absolutely whacked it. The conference call comes out today during market hours, reiterates good guidance. Stocks getting hammered. That's what I'm talking about by looking at the peripheral. Okay, Boeing also had excellent earnings. And again, this is coming, going back a couple of days, is now getting hit. So all of a sudden, we've got a marketplace. Good is bad, up is down. Tech is getting absolutely crushed. Where are you going to hide? I tell you where you're going to hide. Okay, go take a look at the financials. The financials are, and I've talked about this extensively. I was talking about, Apple being the linchpin inside of technology. The financials, they're actually holding the S&Ps together right now. Now think about that if you will. And it's not just about financials, but I want you to think about this for a second. The financials, which were absolutely down, bottom of the barrel, nobody wanted them a month ago. 26.50. The month of July, there was nothing left to buy. Like there literally was nothing left to buy. They're like, let's just throw in the collective towel and let's just buy the financials. Now the financials are actually holding the market together. Okay. And the reason I say think about that for a second, if you look at some of the usual suspects, whether it's Bank of America, whether it's JP Morgan, whether it's Citigroup, if JP Morgan is the lifeboat for this marketplace, we got some bigger issues, right? I mean, you're sitting in the lifeboat over there with Jamie Dimon. I'd rather take my chances, okay, out in the open ocean. But right here, look at the run to the upside inside of JP Morgan. If you're looking for trade ideas, you don't have to look too far. Now, I've actually put on short positions, and I reiterated this in kind of the weekend update. I put on short positions specifically inside of the XLF 25 days out, and I used the 29-27 in-out spread. Nevertheless, at the exact same time, if you're not necessarily into the XLF, if you don't want to take that position, you could absolutely consider coming over to JP Morgan. Because again, JP Morgan, talk about, again, a run to the upside, nothing less than stellar on a percentage basis. And this is the kind of stuff that I like to step in and short. Meanwhile, okay, on the other hand, I actually carry a position inside of Morgan Stanley. And Morgan Stanley didn't rally nearly as far, okay, and has kind of petered out. So what you in effect have right now is a marketplace that's on pins and needles, right? Again, technology is getting hit. And all we have to do is step in and see a little bit of sell-side activity start to hit the financials. It's almost like the financials, they're being bid up. It's our life raft right now. Okay. Meanwhile, we also have energy that is strong today. Okay. And this happens to be a little bit of one-off because you look down the screen, ironically, ExxonMobil happens to, in fact, be down on the day. No matter where I look today, there's no reasoning, no rhyme, no reason of why oil happens to necessarily be substantially higher by the tune of almost 2% with the dollar just backing off mildly. Anyway, going to switch gears on you, then I'm going to come over to Apple's earnings. I want to go over to this market watch because one thing really stands out to me in all of the sell side activity. And again, listen, the S&Ps, they got up to 2841. We've now reverted back down to 2800. Again, they're down 15. I talked about on this weekend's video, buy options, buy options, buy options. Why? Because I'm looking for moves like this to occur. We were specifically talking about moves in the Russell, moves in the Nasdaq. I mean, come on, the Nasdaq thing is on fire today. Well, to the downside, that is. Nevertheless, there's one real standout in the S&P and something that absolutely bothers me. And I think we really have to spend some time in this because I kind of glossed over it on the weekend update. And that happens to be the S&P 100, the advanced decline line. You got to look at this from kind of a tactical perspective. You have the S&Ps right now that are down 15, right? The Nasdaq is clearly under duress. The Nasdaq futures are down over 100, yada, yada, yada. The advanced decline line is a pure 50-50. You got to recognize this market not doing well with a 50-50 advanced decline line. What makes us nervous at a time like this is if correlation is to kick in. What correlation effectively means is that there's 90 products, for example, on one side or the other. This thing could be, 10 to 90 or 90 to 10. If correlation were to kick in, you have to recognize the magnitude of the move that you could see inside of the S&Ps. And that's where, again, I don't think a lot of people are necessarily succumbing to the amount of risk. They're not admitting to themselves the amount of risk that might be in play inside of this marketplace. Meanwhile, in the backdrop of this, the last two trading sessions, sure, the VIX is picked up. But on a percentage basis, you got to kind of start to pay attention here, all right? Because the VIX, it was down again in the the low, and I'll come back over here to a point, but was actually in the lower 11 region and is now shot back up to 14. So the VIX there's the closing bell. The VIX is absolutely in play right now in this equation. As is, okay, if we look down to the bottom and some of the usual suspects, the VVIX, which is the volatility of the volatility index, also being bid back to the upside. So clearly there is some hedging activity, again, that is occurring in the broader market. That is very likely because people are looking at this and thinking to themselves, this is insane. How can the S&Ps be down to the 2800 level with a 50-50 advanced decline line? And the 50-50 advanced decline line, all we have to do is see one day of selling across the board for the S&Ps to take an absolutely monstrous hit, which leads me to Apple. Okay, Apple, I mean, everything is like all the situation is coming to like this perfect head, right? You've got the FOMC meeting coming out. You've got a Bank of Japan meeting. You've got, of course, the Bank of England this week, actually the Bank of India. I could go on about all the different central bankers, but no. In the equity markets this week, Apple really matters, okay? We've seen good earnings being sold into. We've seen bad earnings being sold into. We've actually seen now class action suit being filed against Facebook for not delineating, okay, that they were going to drop 20%. So the tide is starting to turn, which again kind of brings us to Apple. First and foremost, when it comes down to it in Apple, there's nothing spectacular about the implied volatility in here, right? The thing is plus or minus like $8.50. One aspect, though, that you do have to think about, a little bit north of where we're currently trading lies, okay, the $1 trillion market cap mark. Now, that's somewhere, I believe, right around 203 and change. So we're about $13 off the $1 trillion mark. And that's something that I absolutely kind of keep in the back of my head. Now, there's a couple of different positions that you could trade in here. And what I've actually done quite well with recently happen to be butterflies. But for those of you, if you don't understand a butterfly, I'm going to make this really easy. The butterfly is absolutely target practice. And I'm going to give you a perfect example. I'm going to go buy, and I'm going to cruise up here to butterfly. And what we have here is just a 1 by 2 by 1. The butterfly assumes you want the underlying right at 200. And I have to tell you, okay, bullish, bearish, doesn't necessarily matter in this particular case. What I want you to think about in terms of the butterfly is listen, the earnings are coming out on Tuesday, but the butterfly is not going to expand in price until Thursday or Friday of this week. In fact, we'll even look at the analysis of this. And people look at butterflies all the time, and I think they get very, very misled because the butterfly itself, right, it's a little harder to discern, oh, wow, I can make $200 plus on this thing. You know, if I hit the butterfly right at the top, you're never going to hit that. That's at expiration, okay? All you want to do is to be able to make, this is a $2.50 wide butterfly. You want to be able to make about $2 on it would be an absolute home run. Even if you can make $1.30, $1.50 on this, you only have, okay, 18 or 19 cents at risk in here. It is a very low probability trade. But what I'm thinking here in terms of Apple comes out, it moves to the edge of what was expected. Okay, what was expected is about an $8.50 move. And then throughout the remainder of the week kind of trickles a little bit higher and possibly pins right around the 200 strike. Okay, now that's not the only trade we're necessarily going to be doing in Apple. For that, I ask you to tune into live to the TheoTrade chat room tomorrow morning. Again, it's Tuesday morning, and I'm going to go through a number of other kind of key Apple trades. This just happens to be one. Lion a butterfly right on, okay, body of the butterfly right on the 200 strike. It's obvious. Okay, why is it obvious? Heavy amounts of open interest, very close to the $1 trillion kind of watermark out there. S&Ps, even though they're selling off, wouldn't surprise me to see, okay, a day or two of buy-side activity come in, a little bit of a relief rally for Apple, and then possibly some more sell-side activity as this week progresses. Stay tuned, much more. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.